Hello and welcome, everybody. Quick question before we start, just for you to think about. What is the number one destination of people from the city of Los Angeles? Where do they move to? Do you know? The answer is the Inland Empire. And where are the millennials, Generation Z in LA projected to move to? You guessed it, the Inland Empire. The Inland Empire is San Bernardino and Riverside County. So with no further ado, thank you very much, Michael Paz, for informing me about this grant program. Tell us about this grant program for people who want to buy in the Inland Empire, please.
Sure. I'd love to, man. Louis, thank you for having me on. So basically, this grant program is going to help any first-time home buyers qualify from anywhere from 5,000 all the way up to $10,000 in down payment assistance that does not have to be repayable. It's free money from the state of California, and it's going to help a lot of first-time home buyers qualify because, as you guys know, down payment is one of the obstacles that prevents first-time home buyers from qualifying for a purchase.
Did I hear that right? It's free money, free cash?
Free money, yes. That means
Okay.
that you can go, like I said, five to $10,000, plus $500 towards an appraisal credit and $500 towards a home warranty, going towards your first-time home buyer purchase.
Wow. So this is for first-time home buyers. And
Yes.
who's giving this free money?
So first-time home buyers do qualify, and it's from conventional Home Ready. It's called the program is called Home Ready, and this program just rolled out, and it's a newer program. This program just rolled out with other down payment assistance programs that we've seen in the past. Um, they have income restrictions. This is the first program of its kind that does not have any income restrictions. So previously, if you were making above a certain amount of money, you could not qualify for this grant because they only gave the grant to low income or low medium income earners. This
Hmm.
is the first program of its kind. There's no income restrictions. You can make millions of dollars a year hundreds of thousands of dollars a year, still get down payment assistance and still, purchase your property for a first-time home buyer. First-time home buyers, they are classified as no one who's owned a property in the last 3 years.
Oh, so first-time home buyers. But if let's say I owned a property a long time ago, let's just say in 2006, and then I lost it due to the crash. I'm still considered a first-time home buyer for this program.
Yes, exactly. You would qualify.
Okay, all right, cool. All right, and then so this is a down payment assistance. Um, is it limited to certain types of loans or to what kind of can,
Great
can I
question.
can, can I can I include this in a bigger down payment like a 10% down or 5% down, or is it a small FHA 3.5% down? What kind of
It's a great question. So this would be a conventional loan program. It doesn't follow
ah
FHA guidelines. So it's
okay.
conventional, meaning, which is really cool, is that it's actually a lower down payment requirement than FHA. So
Hmm.
FHA minimum down payment is 3.5. This program only requires 3% down. You're getting five to $10,000 towards your closing costs. And
Hmm.
it's for first-time home buyers in San Bernardino and Riverside counties. I believe San Bernardino and Riverside counties are the largest counties in California. So you have a whole ton of cities being affected by this program. And I'd love to dive into some of them that are offering this program because not all cities qualify. That would be the only caveat to this, is that certain high income earning cities do not qualify. For example, Chino Hills and Redlands are two cities that I know of that don't qualify for the grant. But Ontario, Corona, Eastville, Victorville, Lake Elsinore, all these cities do qualify.
Oh wow. So is there like pretty much a price point that this price is where the highest you can get a home in, or is it just
It's
how does
not
that
a
work?
price point. It's based off of a census tract. So the way they divvied up this specific program is that they kind of went city by city. They realized, well, this city wouldn't make sense to have or offer down payment assistance because it's a very wealthy city. For example, Chino Hills, average cost of a home there is multi-millions of dollars. I believe it's like 1.1 or $1.2 million average price of the home. Same thing with Redlands. The average price of the home is a lot higher than some of these other cities. in San Bernardino and Riverside counties. I believe price had an effect on the grant eligibility, but it's based off of census tract. So sometimes you'll get a property right on the borderline of Chino Hills or right on the borderline of Redlands, and you still want to live in that city. It's
Mhm.
possible. It's based off of the census tract. So if you're questioning, well, does my address qualify? Give me a call, email me, and I could type in the address and double check for you.
Okay, that works. That works. And so there's certain neighborhoods that are excluded. So I just contact you about which ones are eligible, which ones are not. And
Yes,
besides,
exactly.
okay, besides being a first-time home buyer, how about other qualification requirements?
Right. So this loan is conventional, so it would be a full doc loan. You would need to have a W-2 job, or you could be self-employed technically, but you would have to make sure that all your business deductions are not on there. You would have to include every single dollar that you make on your taxable income. So every single borrower that's self-employed has tax returns, right? So it's the Section C, line 31 will qualify you based off your taxable income. So sometimes if you're just doing it for the last 2 years, you might want to just pay the IRS the full pop. So that way you can buy a property utilizing this program.
Hmm.
But then the W-2 employees can utilize this program no problem, as long as they've been in the same job for the last 2 years, and they have the last 2 years of their tax return. So that would be 2022 and 2021, since it's still only February and tax return season is right around the corner. They only need to provide the last 2 years of tax return, last 2 months of bank statements, and then we'll run a soft credit to make sure that their debt to income qualifies, and then we'll move forward with the pre-approval process from there.
Okay, so it's a full doc, need to prepare my tax returns, conventional, and you said 5 to 10,000, right? That's the amount.
Yeah, so there's two different programs that I want to go over. One of them is $5,000 towards closing costs. So that's going to cover anything that's lender related. So when it comes to the actual, escrow, title fees, all that good stuff, you can put $5,000 toward the closing costs. The other program is $10,000 towards your down payment. This program I was just made aware of yesterday, so this is
Oh,
literally live. Like today's
uh,
the February 18th. I was just awarded this Friday, February 16th. I just got emailed from a bank, and they told me this program is now live, $10,000 down payment assistance. So this is actually towards your down payment. Anything left over will be towards your closing cost.
okay. Now, so there's a $5,000 towards closing costs. There's an opportunity for a $10,000 for down payment. Um, is it possible for me to get both grants, or do I have to only get one, or how does it work?
Unfortunately, it's by lender, so it's through each bank offers each individual program. One bank offers 10,000, the other bank offers 5,000. The bank that offers 5,000 does have a little bit more competitive rates, which would be UWM. Everybody knows them as the second largest wholesale channel for loans in the country.
Mhm.
So anybody that wants to get the lowest rate, go with UWM. Get $5,000 in closing costs. Anybody that doesn't mind paying maybe a quarter to 0.375, even maybe half a point higher in interest rate, go with the $10,000 towards your down payment.
Okay,
It's really only gonna make a slight difference, maybe 50 to $150 on your mortgage payment. It's really, whatever the best fit for you would be.
I see, I see. Okay, and the $5,000 option of towards your closing costs, you said there's an additional 1,000. You said 500 towards appraisal, right? And then 500 for home
Appraisal
warranty.
credit. Yes, and $500 towards a 1 year home warranty. That's applicable. Obviously, you don't need a home warranty every single time if it's brand new construction or something like that, and the house is fairly new. Maybe you don't want a home warranty, but it's there. It's free money. Take advantage of it while it's still there. We don't know how long this grant program is going to be
Okay.
available for. We don't know if there's a cap that they've made, like the Dream for All program, where there's a certain amount of money only available for that program.
Ah,
We don't know how much money they've set aside for this Home Ready First
I see.
program.
Okay, and you said so this does qualify, you can buy a new construction home with this, right? I mean,
Yes. Yes.
Is there any other limitations on the type of property that you can buy and still get this grant?
Nope. So
Okay.
what's really cool about this is that you can buy up to 4 units. So one unit property only requires 3% down. A 2 unit property, the duplex, some people want to buy a duplex house hack, rent out
Yeah.
the first unit, and then live in one. That would be 15% down minimum. And then 3 to 4 units would be 25% down. But now you're getting down payment assistance to cover some of that 25% or 15% down. So it's
Mm.
not such a huge hit on you if you were
Uh,
thinking about buying a multifamily property. Now it's possible.
I see. I see. Okay. So there are some opportunities to get multi-units and get the grant, just a bigger down payment. I see.
Correctly. Yep.
Okay. And is there anything it sounds too good to be true. Is there anything hidden here that we're not that you haven't stated yet?
Uh, no, not at all. If you don't mind, I'll just share my screen with you
Oh,
very quickly here.
let me enable on.
Yeah, that way I could
Okay,
show
good.
you
Go ahead.
what properties qualify. Sure. Okay. Okay, so can you see this okay?
Yeah, I can see Home Ready
Yeah,
First program.
exactly.
Provident Funding
So
now offers.
exactly. So this is the $10,000 down payment as closing cost assistance in the form of grants. This is
Hmm.
exactly what we were talking about. $500 credit towards the cost of an appraisal, $500 credit towards the cost of a home warranty if purchasing one, and then all the benefits of the Home Ready product, which would be conventional loan. This is the cool part about it. This is the different part about this specific program. There's no AMI restrictions, which is right here. No income restrictions, home ready.
What's
AMI
AMI?
cap is waived.
What is
So
AMI?
area median income, right? So if you go
Okay.
to HUDuser.gov, you can check your county to see what specific income limits there are. I didn't cover what AMI is because that specific restriction is waived for this specific program, so it does not apply. So you guys don't have to overthink it and check AMI at all. That's not a concern in this specific program. But other down payment assistance programs that we've seen in the past, you have to be under a certain income limit or average income limit for that specific area in order to qualify for these down payment assistance programs. This one does not have any effect on how much money you make, right? So we still need a DU approval, which stands for desktop underwriters. It's just a loan terminology. Basically, we run your soft pull and then we'll do a hard pull, make sure your debt to income qualifies along with your bank statements, along with your W-2s, right? And then at least one borrower must be a first-time home buyer and currently reside in identified MSA proof of residency must be documented. So MSA is the census tract that I was covering. Right. So let's say it's you and you just got married to your wife, right? Or you just got married to your spouse. If one of you guys have been a home buyer in the last 3 years and you have not, you can still purchase a property under this program as long as at least one of you is qualified as a first-time home buyer, meaning that you have not bought a property in the last 3 years. So that's really cool.
Hold
I
on.
like the
Okay.
fact that,
So
yep.
when it says MSA, what does that mean?
So the MSA it's an acronym. I'm not 100% sure what it stands for, but it's a census tract terminology, right?
Okay.
So
So
if you
it says currently reside in. That means before I buy it, do I have to reside in that community, or can I be moving from Los Angeles to the Inland Empire and then reside in the new home after I purchase it?
yeah, so
That's
yeah, so with that basically that means that you need to have sometimes you'll need to have what's called a verification of rent. So that means that you need to be having at least 12 months rental history from a legitimate like community, right? So let's say you live in an apartment and you pay your 12 months of rent, and every single time you pay your rent, the specific management company of that apartment building is documenting that rental payment, right? So it's basically having proof of residency in California
in
to
California. Okay.
qualify for this program. Yes.
Okay, so this is for California residents.
Yeah, well, it's nationwide, but in
Uh-huh.
California, only 2 counties qualify, which would be San Bernardino and Riverside. So
Okay.
as long
And
as you
now,
have proof of residency, then you're good to go. You need to
Okay, now
have proof of residency. Basically, you can't just be living rent free somewhere with your parents. You have to have proof of residency. You have to be paying rent.
now can I live in Los Angeles and move to the Inland Empire and get this grant?
Yes.
Yes, okay.
Hmm.
Perfect. Perfect. So then the did you want to share something else on your screen or
Yeah, sure. Let me go back and show you really quick something else. So that was that one, right? The
uh-huh.
$10,000 grant, and then this is the UWM $5,000 grant,
Mhm.
right? So I just kind of wanted to show you the difference. It's basically the same thing. So it stands for Metropolitan Statistical Areas, right? MSAs. So that means that it must be located Borrower's current primary residence must be located in an eligible census tract, right? So that means you can't utilize this program, conventional loan program, in the
Mhm.
middle of nowhere. So it needs to be San Bernardino, Riverside counties, and it needs to qualify in this metropolitan statistical areas. That's what it stands for. So basically, any city that's not super rural. So
Mhm.
if you have any address, I could type it in here, and it's gonna give me a yes or a no, right?
Uh-huh.
I have to select if it's a first time home buyer. If I say no, then it's automatically going to disqualify it,
Okay.
right?
I see.
So that's the one thing that you go ahead.
No, I was gonna say where it says click here for the list of cities, like up, if you go up,
Mm-hmm.
it
Sure.
says on the third line, second bullet point, click here for list of
Here.
cities.
Yes. So these are the MSAs that
Okay.
qualify for this grant program, right? So
Ah, yeah.
not every single state, but a lot of states and across the nation qualify for this program. So if you're watching this video, you don't live in California and you see your state pop on there, maybe you live in Texas, San Antonio and New Braunfels, as well as Houston, Pasadena, and the Woodlands area, Brownsville, Harrington. So Texas had a bunch of cities qualify for this program.
Mhm.
Unfortunately, if you look in
Just California.
California,
Okay.
we only have Riverside and San Bernardino counties, so that's the MSA,
I see.
the metropolitan statistical areas that do qualify for this program.
Okay.
And then some states don't even qualify at all. So we're one of the lucky ones because San Bernardino, Riverside counties are right in our own backyard. We don't have to go all the way, move all the way to Central California or Northern California. We still get to stay in the sunny Southern California, still get to enjoy the mountains, still get to enjoy the beaches. We get the best of both worlds, and the housing is very affordable in Riverside and San Bernardino counties.
Okay. And then which of the two has restrictions on like certain cities don't qualify?
Oh, I was gonna get to that right now.
Okay.
So let's see. I was just gonna go on Redfin real quick, and then that way you can kind of see what properties are available in different cities, right? So let's say it's Redlands, right? 1 second here. So Redlands, right? Let's just say you want to move here, right? 105 East Pioneer Avenue in Redlands, 92374. So let's click on this, copy the address, and go back to the tool, the qualifier.
Oops.
City of Redlands. And then add 92374. 92374. And keep in mind, guys, this specific website is not available for the public. You have to have an NLMS license to access this
Mm.
this specific program to see if
Is there just like a
the
list of
census tract
cities?
qualifies.
No, I see. Is there just a list of cities or no? That's not possible.
There's not a list of cities that qualify versus ones that don't because it's based off a census tract. And like I said, some cities do qualify, even though let's say 90% of that city wouldn't qualify and 10% of the city would, maybe it's
Mhm.
right on the border of a qualifying city. So it's
Okay.
based off a census tract. So let's just check it out. So this one is ineligible,
Ineligible.
right?
Okay.
So like I said, Redlands and Chino Hills are ineligible for the most part. Every single city, every single address that I've double checked Just
How
for
about
those two
how about
are
Corona?
ineligible.
People like Corona. Uh,
Oh, Corona's a great city.
yeah.
Let me show you what I got for Corona. So for Corona, I did go ahead and do like a quick little SPCP eligibility here.
Mhm.
So Corona, I double checked it for this specific address, and it says eligible, right?
Ah.
1055 Meadowview Court in Corona. And then if you go back, you can check some other cities that I've already double checked. This is in Chino, which is neighboring Chino Hills,
Mm.
another great city to live in. That one is eligible.
Mhm.
Another city that's great, a very low cost to buy property in.
Mhm.
Lake Elsinore. Lake Elsinore is very hot. Obviously, you have
Yep.
the lake there.
Okay.
Eastvale is the neighboring city to Corona, also qualifies. Eastvale, Corona are very hot markets right now. So all those cities that I just showed you are eligible. So I would say 90% of the cities in San Bernardino, Riverside counties qualify. That's just a
Okay.
couple of them that I've checked. Chino Hills and Redlands specifically don't qualify.
Okay. Now, being devil's advocate, I have a question. These properties that you looked up right now, like how much was the asking price on those properties? Or, I mean, is there, I know it's not based on asking price, right? It's based upon census tract. But
Correct. Census tract.
are those census tracts? I mean, how are the properties like low priced? I mean, how would you say?
Yeah. Yeah, so the Corona Eastvale were like in the mid 600s. And the Redlands property that I just checked that was ineligible was at 650.
Mhm.
So the pricing really doesn't determine on who is eligible and who is not. I'm not 100% sure how they decided on what census tracts are eligible versus ones that are not. But based off the top of my head, I know that Chino Hills is one of the most desirable locations in the Inland Empire. You have Snoop Dogg, you have a lot of other celebrities that live in Chino Hills. So maybe that's one of the reasons why you can't qualify for a grant in that specific city. The Redlands, I'm not 100% sure, but I do know that the University of Redlands is one of the most prestigious private colleges there. But then you still have UC Riverside, and Riverside does qualify. So
Mhm.
both of those, cities have prestigious universities in them, and one of them qualifies and one does not. So I don't know 100% why some qualify and some don't. But as far as I know, those are the only two cities with those restrictions, and not very big cities. Chino Hills is pretty small as well as Redlands.
Okay, so if I'm interested, I'm interested. I'm watching and I'm interested. I'm curious about this. What should I do?
Okay, so first thing, give me a call. I'll give your other lender a call. Hopefully, you give me a Louis call, and then we'll double check the address for you before we even start going down the pre-approval path, right? You say, hey, I really love this property. I really love this city that I want to move into. Great
Mhm.
schools, walking distance to shopping centers, all that good stuff. Let me know what the specific address is that you're looking at, or Luis. He'll do a search of all the eligible properties in that area, and then we'll give you the green light or the red light, right? More than
Okay.
likely, we're going to give you the green light. We're not going to waste your time. If you're trying to buy a property in Redlands or Chino Hills, we'll double check for you, of course,
Yeah.
but we're not going to say, hey, like this is probably a great, address for the grant. And then we double check and then it's not, right? So we're going to
Okay.
probably guide you to Ontario, to Eastvale, to Corona, somewhere you are going to qualify for the grant. And then from there, you do need to provide, like I said, the last 2 years of tax returns, 2 months of bank statements for sourcing for your down payment, your closing costs. And then from there, we'll be able to write you a pre-approval letter within 24 hours. You'll have a pre-approval letter so you can start going house hunting with
Okay.
Luis.
So then we call up. So let's just say I'm the prospective buyer. I'll call up out of courtesy. You'll look up to see which properties are available, just a courtesy. Once we see that neighborhood, that area where the client wants to live in is available, then they have to provide they're going to have to provide their tax returns, their pay stubs, their bank statements, and qualify for the mortgage.
Yes.
Now, you said a soft pull. I know you've explained it on other videos. What is a soft pull? I mean,
Yeah.
for
A
for
soft
those that don't
pull.
want,
Yeah.
those that feel that their credit score is going to get screwed up if you run their credit, what's a soft pull?
Right. Soft pull does not affect your credit negatively. A South Pole determines what your credit score is and your debt to income ratio, right? So the difference between a hard pull and a soft pull is that a soft pull creditors, other creditors like credit card companies, other creditors that would be contacting you to sell
Mhm.
you stuff,
Yeah.
they do not see that. They do not have access to soft pulls, right? Once you do a hard pull, it opens up all the channels and all the junk mail and all the emails and all the phone calls. Soft pulls do not. So your information is still being protected, but you still get a credit score, you still get a debt to income ratio, and that way we're able to move forward with the pre-approval process.
Okay. So then you do the soft pull. Once again, I have to provide my documentation. If I don't provide my documentation, you can't give me the pre-approval letter, right?
Correct. Yes.
Okay. Okay. Then you give the pre-approval letter, and then from there, look at homes, right? Or
Exactly, exactly.
Mhm.
So make sure you guys are contacting Luis to check those cities to see what's available on the market because he has access to the MLS and he can tell you what properties are available in those specific cities that you're looking at. If you're looking at a 3-2, you're looking at a 4-2, four-bed, two-bath, something like that, big backyard pools. Describe
Mhm.
your dream home to Luis, and then he'll find you a property that would make sense for you guys to be eligible for this grant to take
Okay.
advantage of it.
All right. And how about for those people that because I've heard this, you know, I just saw you on YouTube or on Facebook. We just talked on the phone.
Yeah.
I mean, I don't want to give you my tax returns because I don't even know you.
Exactly.
So
Okay.
what
Yeah.
do you say to those folks?
Yeah. Well, obviously there's going to be some caution when you're providing tax returns and everything like that. So the one thing that I encourage borrowers, my borrower to do if they don't know me, is just look me up on Google. I have plenty of five-star reviews at virtuallending.com. Every single borrower I've worked with has had a five-star experience. As you can do the same with Luis. I'm sure that he has so many years in the industry, so much knowledge and so much experience. He'll be able to help you find your dream home. Another thing is that I work with 62 different banks, right? So if this specific program does not check all your boxes and you're interested in other programs, other down payment assistance programs, let me know. Maybe you're not a first-time home buyer, but you still want to qualify for another type of down payment assistance, let me know. I can check what the other banks have available.
Mhm.
So as a mortgage broker, I have that flexibility to work with you and provide the five-star, experience.
Okay, perfect. And how about those individuals that, even though we've gone through COVID, a lot of stuff is virtual now and email documents and send and scan and email. But I wanna meet you face to face. Can the client meet you at your office or how does that
Of
work?
course. Yes, of course. Our office is located in Covina. So you guys are more than welcome to stop by. Let's see. So our address is 1161 Parkview Drive, Suite 210 in Covina, California. That's 1161 Parkview Drive, Suite 210, Covina, California. If you guys want to stop by, I'm there almost every single day. So we'd love to meet face to face. You guys can get a feel for if I'm going to be the best fit for you and if you're going to be the best fit for us. And we'll hopefully be able to shake hands and help you with your pre-approval process.
All right. And then naysayers. We have had some naysayers on LinkedIn and Instagram. This is a lie. That's just a scam to get you to call them. What do you have to say about
Yeah.
those guys?
Hey, continue to hate on me. I love it. I love it. Like so in 60 days, the other program that we spoke about, which was the FHA profit and loss program, every single other lender is trying to currently sign up with the bank that we went over with. It's like a 2 to 3 week approval process. They do double check every single lender to make sure that they have a good book of business. They haven't had any fraudulent loans or anything in the past. It's an approval process that they have to go through with that bank. The reason why we got approved so fast because we have zero inquiries on us, we have zero investigations on us. Our branch as a mortgage broker is flawless on our track record. We've never had any bad experiences for our borrowers, and that's why we got approved as fast as we did. We're one of the first mortgage brokers in the country that offers an FHA profit and loss program like this, without tax returns. So everybody can hate on us, but in 30 to 60 days, they're all going to be promoting it themselves. So it's all good. It's fine. I'm just getting first movers advantage and that's totally fine.
All right. So you have informed me. I have learned about the FHA profit and loss loan from you. I have learned about this program for buyers in an empire, first time buyers in an empire. I'm excited to learn more and to share with the audience that the next program that you've informed me of, which was an I-10 program. You want to give
Yep.
us a little preview about that preview, not that much.
I love to. I love to. So previously with I-10, you needed minimum of 10% down, and you needed to have two active trade lines for at least 24 months. This new program is an FHA program, 3.5% down, and you only need to have two active trade lines for 12 months, right? So that means you need to have some form of credit, some line of credit for at least 12 months to qualify. But the big thing is now you can qualify as a foreign national, as an immigrant, as someone who just has their green card, with an I-10 number for 3.5% down. It's going to change the game for all of our foreign national borrowers, whether you're coming from Mexico, whether you're coming from another country that want to qualify to buy a home. You cannot qualify to buy a home with 3.5% down.
Okay. And so for those prospective buyers out there, there's going to be more buyers that are going to be coming onto the market. With more buyers coming onto the market, what do you think that's going to do to the prices of properties?
Mm-hmm.
Right? They're going to
It's
go
gonna
up.
skyrocket,
Yeah, it's going to go
definitely.
up. And so if I was in a situation where I was looking for a property or I didn't own something, I would be trying to get something before, there's all these people. Anyway, I
Exactly.
look forward, Michael, to more exciting news and updates and opportunities for home
Yes.
buyers and with the different lending programs, the different banks that you guys work with. So I greatly appreciate the information and your time.
I look forward to helping all of your buyers this year, going forward into the future. And then, like Luis was saying, the more people that start qualifying and getting pre-approval letters, the more buyers and pre-approved, shoppers are going to be on the market. So you are going to start to see a shift in the market. Right now, there's being a very low amount of offers being made on these properties, maybe like 1 to 10 offers each property if it's in a very desirable location. Now you're going to start seeing what happened in 2020, 2021, where there's 20, 30, 40 offers on each property because now these borrowers, as far as foreign national borrowers, self-employed borrowers, are coming in with 3.5% down, bringing these sellers a pre-approval letter saying, "Hey, I am qualified. I'm ready to buy it now. Let's get it done, and I'll refinance in 6 months to 12 months down the line when interest rates drop." So all these other buyers that are holding off and saying we want to wait until the interest rates drop below 5% to qualify for a lower mortgage payment, you guys are going to be left out in the cold, because by the time you're ready to buy, somebody just bought your dream home. With the same down payment that you would have qualified for, and they were willing to pay an extra two, three, $400 a month on their mortgage just for the next 6 months until they refinance. So keep that in mind, guys. Knowledge is power. Luz, thanks for having me on, and look forward to speaking with you again.
All right. All right. Thank you so much. Take care.